ये वीडियो ही रखना है? नहीं रखना। बट वो लिंक पे देखना ना खबर।
A very good morning to all of you. It's a pleasure to see you all after a long time. A few years back, this was a sort of an annual ritual. Every time post budget, in fact, at that time we were a little bit more efficient and used to do the session on the next day of the budget. And today's session really brings back those memories. Come pandemic, we found a new and a more convenient way, definitely, of interacting with each other, and which is virtual conferences. And we kept on doing quite a lot of them. But then that personal warmth and camaraderie was always missing. And we always used to feel that it's not that fun to speak in front of a screen. And I'm sure that applies to participants as well. For you also having a face and speaking and hearing somebody speak in a person would be a sort of a different experience. So we said that, yes, once in a while we should now restart that practice of a face-to-face meeting. And that's where we have this meeting today. And of course, the objective is the budget. And this budget, as you know, and a little bit of a precursor to the budget, the GST Council meeting and a series of recommendations and clarifications in those meetings has given us enough fodder to really talk about today. And I think that's where we would be keeping engaged over the next 2.5 to 3 hours. And of course, we would be also entertaining questions towards the end. When we announced this face-to-face program, over the last few days, we got quite a few requests from clients saying that some of our teams are scattered across the country and it may not be feasible for everyone to travel and attend this type of an event, and they would be interested in listening to this. So what we've tried to do is we've also done a YouTube live thing simultaneously. So if someone wants to watch the entire lecture, they can watch it live right now also, or they can even at a later point of time, it would be available on our YouTube channel, like what we do for our regular events. With that little bit of background, we move to the topic which we are going to speak about today. And again, there was this doubt that is there really enough material? And as we go ahead, you might see that some of these slides are similar to one which we did in the webinar earlier, because the context is somewhat similar. And of course, those slides which are similar, will try to run it a little bit faster and try to take it in the correct perspective, because some of them we have already spoken, but there are many more important points which have come in terms of the amendments. So we will try to cover a lot of them. And I think the context, all of us, I'm sure, relate to this type of, our entire desk is full of post-its, and maybe our calendar is also full of appointments and hearings and deadlines, and different types of deadlines at different forums. And this, I think, sets the context of the GST Council meeting which happened in June. There was really a lot of cry from the businesses that, look, we say GST is a good and a simple tax, but we really, 7 years down the line, we don't see that simplicity. We really don't see any simplicity. It's become much more complex every day. The tax teams keep on struggling just to keep pace with one deadline after the other. And most of the times we say weekends are off, but two weekends always go in your GST are 1 and 3B deadlines. And the other 2 weekends, you will have some DRC 1A or ASMT to deal with. So in that sense, I think this typically puts the perspective of where the GST Council was trying to look at. And what it typically tried to do is, when you look at the recommendations, at first blush, everyone felt, oh, is it possible? Can a government give so much? And in fact, moving from a very extreme heated environment which we had this year, the temperatures were soaring, we always waited for the rain. And when we looked at this GST Council meeting recommendations, we felt that yes, this is a good respite in terms of the first rains which the country got. Same way, around that time, we had that GST Council meeting. So people felt, yes, it's a good respite, lots of clarifications, many of them favorable, most of the things favorable except one or two circulars. And that's where people said, yeah, it's really good. But a small thought which we need to keep in mind is, you can see two pictures here. The first one is of the gentle rain, which nourishes vegetation. But a few days back, we saw red alerts in Bombay. That is also a rain. So it's not a question of rain being good or bad. It's the quantum of rain which matters. And I think in that context, the economic survey, the one day before the budget, the economic survey is tabled in the parliament. We are all aware of it, and it gives a very interesting reading. It's a government document. What does it say? I liked this sentence. And I think that summarizes this entire power struggle and the nature of things which are happening. It says, it's a government document saying this: power is a prized possession of governments. They pride, I have a power. All of you have faced it, right? Somebody was asking me during the breakfast, now circulars have come, so will the officers accept it? The answer is they are required to accept it, but then they have to have their own power. So that word power is a prized possession of governments. This is acknowledged in the economic survey. And then there's a recommendation. They can let go of at least some of it and enjoy the lightness it will create in both the governed and the governing. I think it's a very deep philosophy. If our bureaucrats, if our officers understand even 10% of this, I think we may not need so many circulars to start with. But well, this is what is the background of what we are going to talk about today. So GST Council, there was a press release, lots of things they kept on talking about. And in the last talk also, we just touched upon it that yes, whatever they talk about gets implemented in different ways. One is through clarifications and circulars. And we've seen 3 tranches of circulars being issued, a series of circulars, 207 to 22, 23 to 27 is the next series. And then a third time it came 28 and 29. So 3 tranches of circulars being issued to clarify n number of issues, and we'll be dealing with them. Thereafter, there were notifications to change tax rates on certain products, and notifications to amend the rules. So again, 2 tranches of notifications coming. Amendment in rules coming because various procedures, forms, all of those changes through the rules. And the last tranche which came was the Finance Number 2 Bill 2024 a few days back, where basically the amendment in the Act, the core of the entire provision, the Act came in. Ideally, when I was a law student, I always used to say that Act reigns supreme. Thereafter comes rules, thereafter comes notifications, and thereafter comes circulars. But today we have a situation that circulars come first, thereafter rules come, thereafter notifications come, and finally the Act amendments come. So it's an entire topsy-turvy approach, which unluckily we are into, but well, that's the life we are into. That's the framework in which we are. Interestingly, if you just look at the content, like for example, the first tranche of circulars itself was around 112 pages. So I just took a small count of the total pages, and it immediately exceeded around 250 plus, 200 to 250 pages of amendment in the last 20 days. Compare that with the fact that GST came in June 2017, July 2017. July 2017 till today, if you look at the CGST Act and take a print of it, including its amendments, it is less than 70 pages. And you have an IGST Act of 20 pages. So for 7 years, we have a content of 90 pages. And over the last 20 days, you have a content of 250 pages. And this is what I mean when I say that rain is good in some manner. But if there's too much of an overload of rain, you will find potholes, you will find disruptions in life. And that's the context which we need to bear in mind. एक लाइन पढ़ के अच्छा लगता है कि इसने बोल दिया कि इनवॉइस वैल्यू नील चलेगा. It's beneficial, no query. But what is the basis of saying that? It's a clarification. The clarification has to address some rule or some concept or some principle of law. Just because somebody feels I want to give a relief, therefore you give a relief. Law doesn't work that way. Law cannot mature, law cannot develop in that manner. And that ad hocism results in lots and lots of challenges, which as we go ahead, we'll find that they have to clarify something. Then they find that, okay, this clarification is not enough, so they have to further clarify. And then they just keep on clarifying and making life complicated because those clarifications have very limited legal and jurisprudential value as far as the courts are concerned. So that's what we will have to keep in the back of the mind. We talked about the 4 different ways in which amendments are being brought about. And I think when you look at the 200 to 50 pages of content, you will find that there's virtually nothing which is left, which is unattended. Every concept of GST somewhere we are trying to touch upon. Maybe we are not bringing it in the fore, but somewhere through some manner or the other, we are touching upon each facet of the GST law. And in that sense, when in 2017, we started comprehensively analyzing GST law, we used to talk about levy, we used to talk about supply, outward supply, inward supply, RCM. Everywhere you will find some tinkering here or there in this series of amendments which we are going to talk about. Right from levy, supply, the tax rates, exemptions, valuations, input tax credit, place of supply, time of supply, and sort of a mini amnesty scheme is being proposed. We'll talk about that. And then procedurally also, right from the forms, the manner of filing the forms, the content of those forms, lots of things are changing. And therefore, I think we do have enough fodder for the next 2.5 hours. Let's start with the first one, levy and supply. And section 9, as you know, is the fundamental provision which gives the entire act, rules, notifications life. It's the core, the levy provision. And we are all aware that that levy is on supply of goods or services or both, except on. So this part is not a part of the GST law. And what is that? Supply of alcoholic liquor for human consumption. And that was a policy decision that yes, liquor is ideally a state subject. We want the states to levy a local VAT on it and not take it into GST. So they kept it except on supply of alcoholic liquor for human consumption. Now, the moment you bring this phrase for human consumption, so you have an end purpose driven type of exclusion. And this created a complication and there was a lot of problem which was happening in terms of litigation going around on this. Some taxpayers used to say that certain type of a product, and this is an interesting process which people need to understand. I don't consume alcohol, so I'm not too much into it. But because these amendments came, I had to really research a bit into this. What is all this about? And then I found that there's something called extra neutral alcohol, which is basically the purest form of alcohol, containing more than 95 to 96% of alcoholic content. So, and then what happens is typically when you buy a bottle, it's a diluted version of this ENA. So depending on the type of the liquor which you are making, you will dilute it by putting more water. And you will also add some flavors which you want. Some colorings and flavors which you will want. So there's a process of dilution and flavoring of that ENA. And thereafter it's packed into bottles and sold. So admittedly that bottles is out. That is not into GST, that is a local VAT. But what about this ENA, which is 100% pure liquor, which can never be consumed because if you consume, you will die. It's that toxic. So the view was being canvassed was because it cannot be consumed directly, it is not a liquor for human consumption. So not being a liquor for human consumption, it is governed by GST. And both there were sets of taxpayers who also were saying, no, this is governed by GST and not governed by the local law. and matters went to courts. You have 2 or 3 famous cases around it, where it was being interpreted to say that since ENA is not directly consumable by human beings, therefore, and since this phrase uses the word alcoholic liquor for human consumption only, therefore, the exclusion will not apply and it is under GST. There was stay for VAT and all those things which was going on. So now naturally the industry is a bit confused. How do we deal with this? Because there's a VAT in matter which is going around, because VAT guys are saying this is alcohol, so I want VAT. GST guys are saying I want GST. And now if you pay GST and there's a VAT also, then there's a double levy and there's a cascading impact. So in that sense, the GST Council recommended that we need to change this. We can't have this type of a thing. We may forego a bit of power. Maybe there's a bit of a ambiguity that because of this word for human consumption. Therefore, we will clarify this, and by an amendment, we specifically exclude rectified spirits and denatured extra neutral alcohol from the scope of the levy. So 6-7 years this matter was going around, and ultimately we are coming out of this entire thing. I'm sure not many of us are into day-to-day impact of this, but I think I took this to start with because this brings in one fundamental principle of the GST law and any indirect tax law, that typically whenever you look at any implication, you have to look at the entire chain. Had I been doing ENA and had I been doing alcoholic liquor, there wouldn't have been a problem. But if there's somebody doing ENA, I'm buying ENA from him. And if that is a matter of GST, and what I am doing is not a matter of GST, then the businesses don't work. And I think we are seeing day in and day out situations where exemptions, exclusions start getting denied because there are people in the chain. You cannot expect one person to do everything in the entire business chain. There will be a supply chain. There will be a person who will be manufacturing one particular thing, which becomes a raw material for somebody else. And the raw material for somebody else will be used for manufacturing of finished goods. Now, if you are going to give an exemption to the finished goods, and you are not going to give an exemption to the raw material, you are going to end up in a mess. And repeatedly, we are seeing these types of mess coming up in the concepts. One thing which has not been addressed, and maybe at some date they will have to address, is an issue of assignment of lease. Again, what are we trying to say? We are saying that if there is an industrial plot of land which is given on lease on a long-term basis, it constitutes a service. Therefore, there could be a GST, but as a policy, government doesn't want GST. So we give an exemption to likes of MIDC, CIDCO, etc. and say that when MIDC allots a plot of land to an allottee for, let's say, more than 30 years, so typically most of them are 99 years lease, there will be an exemption. You addressed, your problem was you didn't define service well. And therefore, such immovable property transactions becomes an interpretation of a service. Now you understand the problem. So you give a notification to say that I will exempt MIDC. But that time you forget that the person who has bought a plot from MIDC is not going to always himself only use it. At some point of time, 30, 40 years down the line, he's going to sell it. Now, your notification does not explicitly talk about it. So, while you are saying the first leg is exempted, you then end up with a challenge and notices being issued for subsequent legs. Again, this will go on for 5 years. And after 5 years, somewhere again, you will find some clarification, some circular. And that's the trend we are seeing over the last 7 years. Let a controversy boil. Let it first keep the law ambiguous. Let the controversy boil. Let's see how many of them pay up. Those who are weak will pay up tax along with interest. Officers will arm twist you. They will threaten you with arrest. They will threaten you with bank attachments. So you'll end up paying something. Some people will end up. Some people will be of strong metal. They will not pay. Matters will go to courts. Things will go into litigation. And then council will say, oh, it's such a problematic area. Let's give a relief. The root is, why are we keeping it so ambiguous? Why are we not addressing the problems at the root? Why every year we have to keep on printing reams and reams of paper, giving clarifications and then perceiving that we are giving so much of relief? I think that's something which we need to think through from this type of a thing. So that's just a side note. Now coming back to the next amendment, which a series of amendments, again echoing this thought process. And that comes from the fundamental problem right from the introduction of GST. We say the tax is on the levy of supply of goods or services or both. But what is meant by supply? Interesting definition. Section 7(1)(a) says supply includes all forms of supply. What does this mean? Supply includes all forms of supply. Did I get wiser by reading this? My question is still, what is supply? And unluckily, the law does not have an answer for this question. It just says supply includes all forms of supply. And when you have this type of a very, very vague definition, and when you have a definition of service which says service means anything other than goods, problems start from this fundamental vagueness. To some extent, I would say it's intentional. I may not want to mince my words, but it starts with this fundamental vagueness. And then what happens when you have vague connotations like this? Somebody will say, look, you have employees. Employee decides to leave the job. He was expected to serve 2 months of notice pay. He didn't serve. So you are deducting something from his full and final payments, which is said as in industry is known as notice period recovery. Oh, that's a service you gave to the employee. Now you will ask, what is my service? What is the supply? I am just deducting something from his full and final salary. And then matters went to courts on this. Department used to say, no, you have tolerated the act of your employee not serving his notice period and leaving the employment in between of the notice period. Some people started collecting and paying, some people paid from pocket, some people litigated, and courts were giving favorable verdicts. Essentially, the issue was, is there a service? That was a fundamental issue. And last year, they clarified that, look, this is not a service. You are not giving any service when an employee leaves your organization. So in the absence of a service, just because you are getting some recovery, it reduces your cost, or maybe depending on accounting principle, you may take it in your other income. But essentially, it's not a service. Just because there's some inflow of money or some deduction of your expenditure, that does not become a service. And that, I think, is the mindset. That because your supply is vague, it's not defined in a very compartmentalized manner, officers will start by looking at your P&L account, look at any reduction of expenses, look at any other income which you are getting. They might even scan your balance sheet to see if there are any contra entries in your balance sheets. And wherever they see that something is coming in some manner, directly, indirectly, they will want to say, okay, kuch aa raha hai to supply hi ho gaya na, consideration for some supply. And this, I think, is something which needs to be addressed at a much structural level. But instead of that, what we are doing is, as and when we find issues like notice pay recovery coming up, liquidated damages coming up, we are issuing circulars to clarify that, look, this is not a supply. And of course, both liquidated damages, notice period pay, cancellation charges has been clarified last year. But this year, we have a series of amendments or circulars on this effect. And I think the first two which we will deal with, again, is a very specific one, but again, bringing in a very interesting principle, is from the insurance sector. Now, what's happening, ideally, we are all aware that in insurance, there are certain types of risks which a single insurance company may find it difficult to cope. So there is a model in the industry and many other industries like this. Insurance is just one example because it's the amendment we are talking about it. So there are 2 or 3 insurance companies who will come together and provide a co-insurance to a company or to a client. It's a large risk to be covered. One company says, I am not willing to take that much risk on my head. So 2 or 3 co-insurers will come together and enter into an arrangement of an insurance contract with a client. Naturally, one of them will be defined as a lead insurer. And the lead insurer will receive all the premiums. It will pay the GST naturally because it's receiving premiums and premiums are liable for GST. So it will pay the GST on that. And then maybe 40% is to be given to a co-insurer, 40% amount will be given to the co-insurer. Now, whether the co-insurer has to pay GST on 40% was the controversy. I hope you are clear. 100 rupees of premium received by the lead insurer on behalf of lead insurer as well as a co-insurer. On 100 rupees, 18 rupees GST collected from the customer paid to the government. From that 100 rupees, now 40 rupees is given because that's the share of the co-insurer. Whether GST is payable or not payable on the ends of the co-insurer. So co-insurer gets rupees 40. Department says you are receiving money. It's a supply of a service. You have supplied a service to the lead insurer. So please give me GST. Now co-insurer is confused. He says, I'm not giving any service to the lead insurer. Both of us are jointly giving a service to the insured. And I'm sure these are examples which happen in construction sector. It happens in engineering sector. It happens in banking very commonly. You have large loans being given by two banks jointly. They are very common examples. But of course, right now we'll have to restrict it to insurance because the amendment is relating to insurance. So this controversy was going on. The co-insurer was saying, I am not liable to pay GST because I am not rendering a service. Both of us are jointly rendering service to the insured. And for that service, the tax has been paid. Maybe instead of me, it's the lead insurer who has paid the tax. And then we go into the concept of agency and all those things. So now what we are doing is we are amending Schedule 3 of the GST Act. That's a recent budget proposal to say that when there is an apportionment of co-insurance premium by lead insurer to the co-insurer, it will be treated as neither a supply of goods nor a supply of service. Now, of course, when the law was introduced, we spent a lot of time discussing the structure of the GST law. And one thing which we discussed was that the schedule, there's something called supply of goods or services are liable for tax. Schedule 1 is the deeming fiction, which adds certain things into that scope. And Schedule 3 deems certain things not to be a supply of goods nor a supply of service. So it is out of the purview of the entire tax provisions itself. So we are bringing it out of the tax provisions. We are saying, nahi, ye to goods bhi nahi hai, service bhi nahi hai. I would agree to that, but that ideally shouldn't be a part of Schedule 3. As a concept only, there's no supply of goods or services here. But now we bring it through Schedule 3 and we bring it subject to a condition. And what is that condition? Subject to the condition that the tax is paid by the lead insurer on the entire premium. Yes, in my example, 100 rupees पे 18 rupees भरा है और 40 rupees जा रहा है नीचे. Here everything is very good. Understand the problem of this subject to condition. It says subject to the condition that tax is paid by the lead insurer. What if this insured is outside India? It becomes an export of service. We are aware. The recipient located outside India, money received in convertible foreign exchange. Some officer will start few years down the line saying, subject to the condition that tax is paid, but it's an export. You are claiming 0 rating, so no tax is paid. So why should I give you the benefit as a co-insurer? Again, you are not addressing the concept. The concept is, are we defining a joint service to be an inter-se service? When two people, A and B, come together and provide a service to C, are we saying A is providing a service to B? I think that's the question which needs to be addressed. And that we are not addressing. We are trying to bring amendments to just clarify certain things and somewhere try to give that relief, but not by addressing the core. Because if you address the core and address it through a principle, all situations will get covered. But when you are trying to just deal with one of things, other problems are still there. Like if I have a bank, there are two banks who jointly lend, and the entire processing charge is received by one bank. And then a part of it is shared with another bank. It's exactly the same scenario like this one. But there, whether I can take support of this? Answer is no, because this is talking only about insurance. Had we clarified that, okay, the supply concept itself will not include joint provision, things would have been very different. Like, for example, in service tax, we had a circular which clearly highlighted that joint provision of service by two people to a third person does not mean there's an inter-se supply of services. In the context of film distribution, there was this circular. So that type of a thing would have made a bit of a difference. But well, this is what we have. We have Schedule 3, which has been amended to this effect. Same thing is happening for reinsurance also. So again, this is a very interesting scenario. An insurer takes a reinsurance with a third party. So it's a reinsurance service given by the reinsurer to the insurer. And naturally, if he does it directly, there's some discount or a brokerage which is given back to the insurer. And that brokerage, we are now told that is not liable for payment of GST. And logically so, because it's more in the nature of a discount rather than a service given by one person to another. This is one more interesting example. And this, so that friends came in through a schedule. So an amendment in the act. Now this is coming in through a clarification, circular. What is this example? We are all using UPI day in and day out. All of us are aware about the mechanics of UPI. Yeah, and you are with HDFC Bank, you have an account, you want to transfer some, let's say even 50 rupees you want to transfer to somebody in ICICI Bank, just have his UPI handle and 1 minute automatically the money goes. We are all happy. 50 रुपया मुझे भेजना था, उसको 50 रुपया लेना था, हो गया. What is the commercial arrangement for this? Why do banks enter into this? There's a lot of investment into this, right? If you look at it, nobody has charged you anything. So why would somebody do everything for free? Why would somebody create an app? Why would somebody do this entire infrastructure, monitor everything for free? And this was a challenge. We wanted to incentivize UPI. We wanted to do RuPay and penetrate the digital space. So the government mandated that there will be no charges on UPI. But then everything is implemented by private sector. So a Ministry of IT actually gave an incentive. It said that we will give certain incentive to the acquiring banks, so as to compensate for the activities which they are doing for all these UPI transactions. Now the question was, an acquiring bank receives, let's say, 1 lakh rupees from the Ministry of Information Technology. What does it do? Does he have to pay GST? Is it a service? Was a question. So last year, this was clarified. And according to me, it's a service. It's only that instead of getting money from one person, you're getting money from a third person. But anyways, in all its wisdom, the government clarifies at that point of time that, look, this is more in the nature of a subsidy rather than a service. And since this subsidy is received from the government, there is an exclusion which says that subsidies received from government will not be taxed. So acquiring bank does not need to pay a tax. वो last year किया. But that's not the end of the problem. There are a network of banks involved in this UPI. One is the acquiring bank. The other is the issuing bank. Because there are two parties, so there will be two banks. Right? Both of them may be from separate banks. So what issuing bank को तो कुछ नहीं मिला. So what the acquiring bank does is, उसको जो incentive मिलता है subsidy, उसमें से they share a part of that subsidy to the issuing bank. तो अभी वहां कंट्रोवर्सी चालू हो गया. फर्स्ट कंट्रोवर्सी खत्म हो गया because CBC clarified that through a circular that acquiring bank did not pay tax on monies received from ministry which is in the nature of subsidy. अभी issuing bank के यहाँ तो और problem है because money is not coming from ministry. He is getting money from a banker, another bank. So that clarification directly did not apply and they were being asked to pay tax. If they pay tax, acquiring bank can't get credit because it has no output tax. So effectively, pura exemption waste. So therefore, this time it is now clarified that the share of incentive which the issuing bank gets will get the same character like the subsidy. So just like the first transaction is subsidy, even the 50% or 40% share which is coming to the issuer bank again will be a subsidy and therefore again no tax. Good to clarify, but doesn't find any context in the act. Because act says subsidy is given by the government. Unless you want to say that it's me getting from MEIT and it was only the acquiring bank who was a pass-through, then it's a different game. Otherwise, there's a problem here also. Again, these are all beneficial circulars, so people are happy with it, but then these are challenges which come in. Then we have a circular on salvage values. Again, a very conceptual and a nice clarification. Basically, what it says is if an insurance company gets a deduction when it makes a claim, it deducts some amount on account of salvage value. So many times if there's a wreckage, the destroyed material belongs to the insurance company. So ideally it could take over the material and sell it itself. But what happens most of the times is the insurance company tells to the insured that you sell it and whatever be the salvage value, I will deduct in my claim settlement. So when there's a deduction of a value in the claim settlement, this circular says there is no supply by the insurance company to the insured and therefore there is no GST. Perfectly fine, no problems up to that. Second scenario, they are saying that if the material is taken over by the insurance company and then sold, then it's a supply. So it's clearly, I think it's clearly a logical circular and I don't think there's any challenge on this circular. Warranty, again, a logical circular, and these circulars I'll go a bit faster because we have some important points at a later point of time to touch upon. Is about warranties given by manufacturers or distributors to end consumers. Again, few interesting clarifications. If goods are replaced under warranty by the manufacturer, clearly there is no supply and therefore there is no GST because there's no consideration, they are giving goods as a part of a warranty contract, so no tax is payable. And because it was a part of the warranty contract, you cannot say that I'm supplying goods free and therefore reverse ITC. So no ITC reversal also required. Same thing happening in case of distributors also. But when you look at distributors, in business parlance, there are various models in which distributors get compensated for the spare parts. So different scenarios, and each scenario they've tried to clarify. They've said that if a distributor is supplying parts from his own stock and then he gets replenishment from the manufacturer, because the warranty is the obligation of the manufacturer. So if the distributor gives a part from his own stock, naturally he will need either a money or that part back from the manufacturer. So if he gets the part back from the manufacturer, we are told again there is no supply, there is no monetary consideration, no transaction at all. But if he supplies from his own stock and he gets money from the manufacturer, then clearly it's a transaction. There is a supply and therefore there will be a tax payable which will be claimed as input credit by the manufacturer. And again, extended warranty, we are told that generally the person's timing is different, so they will not consider it as a composite supply. So that is as far as the supply is concerned. Now comes Schedule 1. And Schedule 1 is something which has actually bothered us ever since 2017, the GST was introduced. We have a very neutral type of an entry, supply of goods or services between distinct or related persons. Supply of goods is very easy to understand. I have a warehouse in Maharashtra. I have a warehouse in Gujarat. I ship goods from my warehouse in Maharashtra to warehouse in Gujarat. We treat it as a branch transfer of goods, pay tax in Maharashtra, claim credit in Gujarat. Ekdam simple live situation. Goods are tangible. You have movement which can be tracked through e-way bills, delivery challans, etc. I don't think there's any controversy on this, except some small controversy on valuation. There's not too much of controversy. Problem comes is when you start saying supply of goods or services between distinct persons. So you have used the word or services to bring it goods and services similarly. But you have not defined what is a service. So how do you interpret what is a service? That is a larger question. Generally, we always understand service is you start with the consideration, start with a contract, start with a consideration, and then define a service. And I used to give this example many a times. A person is acting in a movie. A is a person who is acting in a movie produced by B. Who gave service to whom? A gave service to B? Maybe not. If A is a struggling person, nobody takes him in the movie. He finds, because his father is an actor and he wants to launch his son, he pushes some producer कि जबरदस्ती इसको ले लो, चाहिए तो मैं पैसा देता हूँ, उसको एटलीस्ट एक मूवी में ब्रेक मिल जाएगा. Will your answers be the same? Will you still say A is providing a service to B? If the actor actually gives money so that he comes in the movie, will your answers change? Will you say it's the producer who is promoting the actor? And therefore it's B who is providing service to A. Your answers totally change based on the flow of consideration, based on the contract and the context of the contract. Right? Is this example clear? Now this, what I would say, flexibility of service or fluidity of service is not appreciated. And we now bring in a deemed supply to say supply of a service between distinct persons, even if without consideration, will be deemed as a supply. So आपने consideration को तो side पे हटा दिया. तो how are you going to decide who is giving service to? अभी वो example में we are going back to the same thing. A to B or B to A couldn't have been known until you know the full facts about consideration. But now consideration is itself done away with. And we are keeping on grappling. Ki head office provides service to branch or branch provides a service to head office. You can argue either ways. One will say head office provides a support service to branch. Somebody will say branch provides a support by having that marketing setup and all those people there to promote the business of the head office. And there's no consideration. Before 2017, there was no consideration to define anything. And this, I think, is the fundamental challenge which comes in. How do you define what is this deemed supply of a service between branches or between related persons? And while all of this was happening, department wants to join the bandwagon. For them, this is a party. Go back to the first line. Wherever there's an ambiguity, they find that they have power. The ambiguity grants them that power. If everything is clear, they can't call you, they can't summon you. But now, because of this ambiguity or stretched things start happening. What happens is one thing, and there are many examples like this, all of us have faced it very commonly, guarantees. There's a company, subsidiary company, who wants a facility of, let's say, 300 crores. Uska balance sheet में 5 crore का capital है given by the parent company. And it's setting up a new plant. It wants a facility of 300 crores. बैंक के पास जाएगा, बैंक बोलेगा नहीं ग्रुप तो अच्छा है, I want to give a loan, but this is a subsidiary company, उसका पास तो capital ही नहीं है. So most banks insist on a guarantee given by the parent company. I will give you a loan only if your parent group or maybe the shareholder or the parent group gives a guarantee that if you default in repayment, the parent company will pay. Very common transaction. Parent company giving a guarantee on behalf of a subsidiary company to the bank. So there's a guarantee contract between the parent company and the bank. There's another contract of lending between bank and the borrower. There is no explicit contract between the parent company and the subsidiary company. Now, department used to say parent and subsidiary are related persons. So Schedule 1 Entry 2 applies. Therefore, you have provided a service to the subsidiary. So please pay me a tax. This is the starting point of the controversy. And if you really look at that controversy, the fundamental question is, can we really say that a parent company is giving a service to the subsidiary? We are not addressing that. Last year in October 23, lots of controversies were going around. And one argument which people used to take was that there is no service. The second argument which was very frequently taken was we are aware about the proviso to Rule 28, which said that if recipient is eligible for full input tax credit, in that case, the value which you are going to say will be accepted. So the argument was that, look, I have not well done anything. So it's take 0 as a value. 0 is also a value. So 0 into 18% will become 0. So there's no need for me to pay any tax. That was the alternative argument which was being made. And in this context, they amended the rule in October 23 to bring in one sub rule extra in that Rule 28, Rule 28.2. And they said that all guarantees we will treat 1% as the value. And they didn't give this benefit of the proviso. 1% of the guarantee amount will be treated as the value. बोलने के लिए तो बोल दिया. They felt that this is a benefit because now I'm bringing in certainty कि 1% पे टैक्स भरो और क्रेडिट ले लो सब्सिडियरी को. लाइफ इतना सिंपल नहीं होता है. क्वेश्चन केम अप की 2 पेरेंट कंपनीज है, दोनों ने गारंटी दिया है, तो 1% किसका गिनेंगे? दोनों को 1% गिनेंगे. Many other questions started coming up and matters went again to courts. Courts gave stay, and therefore again this GST Council made an amendment in the law and a circular. So 2 things are happening. There is an amendment in the rule and there is a circular. Now what are they talking about? The first thing which they are saying about is that this rule will not apply. The Rule 28.2 will not apply to export transactions. So if your subsidiary is outside India, then this Rule 28 sub Rule 2 will not apply. Make no mistake, they are not saying that there is no tax. They are saying rule 28.2 will not apply. The default rule of 28.1 will still apply. And that's where the question comes. Default rule, what does 28.1 say? Value it based on the open market value. But if recipient eligible for full input tax credit, whatever value you do will be accepted. Look at it in a context. You are not clarified whether there is a supply. So when you do so much thing, we for a moment assume there is a supply. वरना तो ये सब रामायण बताने का जरूरत ही नहीं था अगर राम नहीं था तो, नहीं? So we assume there is a supply by the parent to the subsidiary. You are a parent in India, your subsidiary is abroad. We are now told rule 28.2 will not apply, and they assume, then they do this, they assume that I'm giving a big relief to all these companies who have subsidiaries abroad. What are they clarifying? Rule 28.2 will not apply. So you will go in the default rule, rule 28.1. 28.1 says start with the open market value. And then proviso says if recipient eligible for full input tax credit, 0 will be accepted. Your recipient is subsidiary abroad. Can we interpret that the recipient is eligible for full input tax credit? Input tax credit provision don't apply to foreign companies. So the proviso doesn't apply. Your controversy, you are still stuck with the same old controversy that how do you deal with this? You'll have to somewhere find an open market value or contest that there is no concept of supply. Or maybe at some point of time say that place of supply is outside India, so I want a 0 rating benefit under the export of services, which again is going to be a challenge because there's no receipt of convertible foreign exchange from outside India. So in that sense, honestly, good intention, but they have not thought through with what they have done. And the mess still continues because of 1%. पहले ये भी था कि पहले 1% लिखा था, कुछ लिखा नहीं था. तो अगर मेरा 5 साल का गारंटी है तो will I pay 1% once and that's the end of it? So now they've amended the rule to say 1% will be per annum. Earlier they missed that word per annum. So people used to say कि मैंने 10 साल का गारंटी दिया है तो मैं एक बार 1% भर दिया, 10 साल तक चलेगा वो. And which was a logical and a right answer according to me at that point of time. So they realized the mistake that they had done in October 23. They rectified it to say that it should be 1% per annum. And there again rule 28.2 जिसके अंदर वो full input tax credit का provision नहीं था वो लेके आ गए. तो उन्होंने बोला कि here also there is a proviso which says that if recipient is eligible for full input tax credit, then the invoice value will be accepted. So essentially, if you look at this entire thing, what happens is if there are two domestic players and recipient is eligible for full input tax credit, essentially this rule has no value. There's no meaning only. You may not do anything and life can move on. Problems will come in industries where there are no input tax credits available. Examples like educational institutions, hospitals, where they are into nil supplies, or maybe banks where there is a restriction of 50% input tax credit, full credit is not available. So those places you will face problems. Otherwise, there are not major challenges which comes in. We talked about export. What happens about import? An interesting circular, another circular 210, which goes into this zone and says that in case of import, and a very convoluted way of doing it, they are saying in case of import of services, you have to issue a self-invoice. And the value which you portray in the self-invoice will be the value which will be acceptable. So this is one parameter which we are coming into. Because it's notional, even if you portray a 0 value in your self-invoice, it will be acceptable and therefore life will move on simply. Problem here is slightly different. An interesting issue coming up from that circular. We are saying that, let's say there's a foreign company giving a brand to an Indian company. Problem was, they used to say that this brand had to be notionally valued and tax paid. To clarify that, they are saying that, look, recipient is eligible for full input tax credit. Taxation is under Rule 28. If recipient is eligible for full input tax credit, 0 value portrayed in the self-invoice will be accepted. So far, so good. All of this clarification starts with an implicit assumption that there is no amount charged for the brand. What if, because of transfer pricing requirements, you are actually remitting something towards brand royalty? to a related person. And this is very common. IT support, brand royalties paid to foreign parents is very common. So you are paying, let us say, 20 crores to your foreign parent as a royalty. Will I need to pay tax on that 20 crores? There's a foreign exchange remittance happening. Now, if you really go through this entire circular and the principles which it tries to bring about, it results in an opening up of an entire Pandora's box. Why is it that happening? Because you are required to pay a tax on the value. Value comes under section 15. जहां बोला है generally non-related के लिए consideration. So 20 crores in my example is a consideration. But for related persons, consideration is not to be taken into account. What is to be taken into account? Value determined under Rule 28. So consideration gets a bye-bye. 20 crores what I'm paying is not relevant. Just like 0 which I didn't pay in case of notional transaction was not relevant. 20 crores I'm paying is not relevant. I have to go to Rule 28. What does Rule 28 say? Market value, provided that if recipient is eligible for credit, value plotted in the invoice will be accepted. So consideration कहीं word नहीं है वहाँ value. So the value plotted in the invoice. And again, now they are clarifying that invoice is the invoice generated by the recipient, because the law requires the recipient to generate an invoice. So if I generate an invoice of 0 value, even though I'm paying a amount of 20 crores, can I not say I will not pay any GST? That's an argument which is aggressively floating around. Of course, in many cases, input credit available, people will not want to take that. But if there's a lot of accumulation, you are paying and just claiming refunds or just accumulating input tax credits, I think this is not, it's a bit aggressive, but it's not something which can be totally thrown into a dustbin. It's a possible line of an argument looking at the entire distinction between the concepts of consideration and value. Then we have this, again, simple clarifications that loans granted between group companies, again, interest is exempted. If there are processing charges, then if they are charged, it will be taxable. If not charged, again, you will go back to that import of service wala principle and say that nil value will be acceptable. And I think this is an important point where we will spend some time today. Again, this is something which has kept on bothering us ever since 2017. We talked about notional services. What is happening is, while we brought in this concept of notional services through Schedule 1, Entry 2, we also carried forward the old legacy of input service distributor. And here we'll spend a little bit of more time because this is very widespread. And we had taken some positions. Because of the amendments, those positions will need to change moving forward. So it's important for all of us to really understand these concepts well. So as of now, as we have always understood, was that ISD and cross charge are to some extent overlapping concepts. The idea is to bring in a parity of credits and output taxes. So in ISD, you can take an ISD registration, you get input service invoices, and you distribute those taxes to the different branches across the country. Whereas in a cross charge, what you do is you claim all the credit at the central location head office. Then you charge an output invoice. So you pay taxes on outputs, and the taxes on output which you pay is claimed as credit by the branches. So these are the two overlapping alternative models which we believed. And we always felt that ISD is optional. There were FAQs to that effect. And as far as cross charge is concerned, there was a bit of an ambiguity, but in most cases, because ITC was available at the branch end, we used to say that the value which you are going to accept, we used to do some valuation and other things, but we used to say that whatever value we do is typically the officers cannot have an authority to question too much on that valuation because of the proviso to Rule 28. So this is what was being more or less implemented, and most of our clients, we had avoided the ISD hassle because there's too much of paperwork and ambiguity around that front. So we had avoided that, and most of the organizations were on the simplistic route of cross charge every 3 months or 6 months or 1 year, depending on the organization size. Just raise an invoice to the branch, pay tax in the head office, and the branch claims the credit. This is how life has worked simply, I would say, for the last 7-8 years. While it was working for most of us, some places there were pockets of litigation from ground level. And those pockets of litigation were coming from various conflicting advance rulings. And I think the celebrated advance ruling is from the Karnataka Advance Ruling Authority. In the case of a hospital, again, context becomes important. Hospital provides an exempted supply, and therefore there was a mindset issue that, well, perhaps there is a saving of tax or evasion of tax. So we have advance ruling in Columbia Asia Hospitals case, which goes into this into detail and says that cross charge is mandatory, and because full input tax credit is not available, everything has to be cross charged. While all of this was happening, there's a Cummins advance ruling from Maharashtra which says ISD is also mandatory, despite an FAQ to the effect that it is optional. And all of this was resulting in a lot of confusion. At the same time, while all of this was happening at a bureaucracy level, at a state level, the major dynamic which was impacting this entire situation was blocked credits. And a very common example I will give you, and I'm sure many of us sitting over here would now realize and relate with this example. A company has, let us say, 1,000 employees across the country. Most employees give a benefit of a group medical cover to their employees. Right? So the company takes a group mediclaim policy for this 1,000 employees. Company has its headquarters in Maharashtra. So it enters into a contract with the insurance company in Maharashtra and pays the premium. Insurance company collects GST. What GST will it collect? C plus S. You are in Maharashtra, insurance company is in Maharashtra. What will you do? Remember 17.5. Mediclaim is blocked credit. You will straight away treat it as your cost. In your return in 3B in Maharashtra, you will show it as ineligible credit. So who takes somebody will have to, some state will take the tax. Because it's ineligible. If it was eligible, nobody gets the tax, right? Somebody else gets a credit. But here nobody gets a credit, so some government takes a tax. Which government will take the tax? Maharashtra state government will take the state component of it. But the employees are working across the country. So Rajasthan feels, मेरे यहाँ 50 आदमी काम कर रहे हैं, उसका मेडिकल इंश्योरेंस हुआ है, मुझे तो 1 रुपया भी टैक्स नहीं मिला. Are you getting me? So the states were aggrieved with this mechanism as of now. And that's why states were pushing ki, while ISD is a center-sponsored provision because it came from the Senate rules, the resistance to remove the ISD was from the states. And even today, it's more from the states. And this issue they tried to address. Way back in 2019, the GST Council had a detailed discussion on this. And they issued a draft circular. But then ultimately the council said, look, this looks very complex. So let's park it for the time being. So a draft circular, which was a part of the agenda, was not approved at that time by the GST Council. And they said, let's park it. There are better things to, there are too many fires at that time. And law also had to be stabilized in many other areas. So they kept it on a low priority on a parking zone. But the draft circular is available. And that's right to say, at some point of time, we'll make ISD and cross-charge compulsory. And both will run parallelly and both will work on certain principles. And that circular gives a detailed clarification of what happens and what does not happen. Because it was parked, it didn't see the light of the day. Industry continued the way it was doing, and rightly so. And while all these controversies were happening, last time they realized that no, we need to do something about it now. So in the last budget, they amended the law to make ISD mandatory, but it's still not notified. And this time, in the series of notifications which we are talking about, there are detailed notifications about amendment in the rules relating to ISD. So at some convenient cutoff date, maybe October, we don't know, but maybe a convenient cutoff date will be notified. And from that notified cutoff date, input service distributor will become mandatory. And because many of us here have shied away from input service distributor, and rightly so, this becomes a significant change in terms of our activities and implementation and the way we will be doing business processes moving forward. So in that context, we need to understand how do we go about implementing it. Unluckily, the challenge is there is with us to understand what will be ISD and what will be cross-charge. We only have that draft circular which was not accepted by the GST Council, which never saw the light of the day. Beyond that, we do not have enough guidance available on which line items of your P&L account will become ISD, which items will become cross charge. So I think we will have to fall back on that draft circular and understand what exactly is ISD. And after understanding that, if we try to interpolate with the definition of the ISD as given, maybe we will be able to connect the dots and maybe we will be able to understand and implement these provisions in a reasonably fair manner. So this is the chart which has been given. Somebody who's far off may not be able to see it in detail, but what basically it shows is there's an head office. They have shown 2 branches. And then they are saying that the head office procures various services. And those services, some services they are saying will be distributed, and some services they are saying will be used for internally generating further services. So this distinction they are trying to bring in, a distinction between a service procured on behalf of the branch by the head office and a service procured by the head office for its own consumption, which it will use for further generation of a service to be given to a branch. And let's understand this through examples given in the draft circular. The first example they have given, and that is interesting example, we'll anchor on that example again and again, is the head office enters into a contract with a security agency to supply security guards at its head office as well as branches. So there are 10 people employed at 10 security at Delhi, 10 security at Chennai, 10 security at Bombay. And services are received naturally by those 3 branches. But contract is entered into by head office and billing is done to head office. So they are saying this is an example where services are received by the branches, but contracted for and billed and paid for from Mumbai. This is an example, according to them, of an ISD, where service is received by somebody else, but contract is signed by somebody else and invoice is received by somebody else. And in fact, there's another question also which talks about a situation that it is possible for a head office to act as a central procurement agency for the entire country. There's a very specific question on that. Now, when I'm answering this, I'm putting this is a live example given in the circular. Many of you might say that this is theoretical, because practically what most of us do is Delhi ka security PO is issued from Delhi, paid from Delhi. You don't have a situation ki examples like security is centrally procured from a common PO and paid from a common PO. If we read the FAQ and we read the ISD, perhaps the concept of ISD is to give you the benefit of centrally procuring. And if we read the entire ISD in that provision in that manner, we may be able to appreciate what I'm going to speak about in the next couple of slides. Because there's a lot of discussion कि audit fee को भी ISD में डालना पड़ेगा, bank guarantee को भी ISD में डालना पड़ेगा. So many questions come up, and then life becomes complicated. So if we understand ISD background from this perspective, and when we go to the definitions in the next slide, we try to interpret those definitions in that manner, maybe life will be slightly easier. I'm not saying it will be a smooth walk, but it will be easier rather than making a very complex type of a structure of ISD. So that is the first example that that circular talks about. The second example is interesting. There are 10 people appointed in the admin and the HR team at the head office, and there are some engineers appointed by the head office. So 5 employees at head office who are engineers who will maintain the laptops of the entire country. कहीं भी किसी को भी कोई डाउट है या कुछ है तो ये आदमी उसको टेक्निकल सपोर्ट देगा, एम्प्लॉय, राइट? Again, a very commonplace thing happening. So the circular says that these are nothing but cross charge. It is a service given by the head office of business support or maintenance of the software or technical support or whatever is being given by the head office to the branches. And this should be done through cross charge. Now, of course, this was a draft circular, and by this time that hospital decision had also come. And there was another controversy about what happens to employee cost. So यहाँ पे क्या बताया उसने, ये 5 engineers जो आपने employee रखा है, they are rendering service to the head office, and the head office in turn is rendering service to the branches. Are we clear up to here? Then later on, as a concession, there was a circular to say employee cost is not required to be a part of valuation for cross charge. It's a beneficial circular. We'll keep that in mind. But the principle we are taking here is that in situations where there's an employee at the corporate office, there's an admin team, there's an HR team, there's a maintenance team. Those maintenance, HR, admin teams provide a service to the branches. How to value it? That's a separate game. But there's a service. Keep that in mind. And finally, they're talking about software developed by one branch for another. I think that is the project level branch transfer. I think that's simplistic and I don't want to spend time on that. Understanding, if we understand these principles, and perhaps they're right to some extent, we will see that any service will have three facets. One is the person who is contracting for the service. One is the person who is actually providing and receiving a service. And third is a person who derives the benefit of the service, beneficiary of the service. They could be different. Right? Like if you look at the first example of security, contract was by the head office. The actual provision and receipt of service were by the branches. That is slightly different from the second example, where the employment service of the engineer is contracted and received by the head office, but the benefit of that employee is received by the branches. So if we go into that zone, we will find that if X is contracting and Y is receiving a service, then it will be ISD. If X is receiving the service and Y is deriving the benefit, it will be cross charge. So that is how one will differentiate between a ISD and a cross charge. I know it's a bit vague, but as we go a little bit further, maybe we'll look at some examples and that will drive home this entire context. Keep these three words in mind: contracting, receipt of service, and derivation of benefit of that receipt. Right? We'll keep that in mind and then look at various situations. Let's look at some situations. And I'm sure in your P&L, there will be hundreds of more situations. But here I've just picked up 5-7 illustrative principles, situations, and then we can discuss and take it ahead from there. First is the one from the circular itself, security. We know that there are not many examples. Second example, again, coming from the circular, cross charge, which more or less in most of the examples we are implementing. Now comes some live examples. And we'll take situations one by one. Let us say the entire freight for the entire country, the tax is paid under RCM by Maharashtra. I highlighted that the draft circular allows you to pay tax in Maharashtra, even for freight of a factory at Gujarat. That cannot go through cross charge. That will have to go through ISD because the actual freighting service is received by the Gujarat factory, but billed to Maharashtra, paid from Maharashtra. So if today you are doing a cross charge for that, that will not be permitted. It will have to go through ISD. Again, I can tell you most of the situations, the RCM for this freighting would have been paid by the local branch only. And it would have been, in that case, if it's they only paying, then head office is not involved into the process. No ISD, no cross charge in that situation. Look at the second example, which again I started with that Mediclaim example. That is where the challenge is. Insurance. You have a pan-India insurance, maybe medical insurance, which is ineligible, which again will have to now go through ISD, and the ineligible block credit will have to happen at the respective branches. And that solves the problem कि महाराष्ट्र पूरा 1000 employee का mediclaim का GST नहीं खा सकेगा. That is the thought process. Right? So moving forward, the mediclaim example, which I started that entire discussion with, how will it work? You will have to say that the medical insurance service received is received by you, not received by you, it's received by the branches, but paid centrally from Maharashtra. And therefore, you will take it into ISD, define it as ineligible, and distribute that ineligible credit to the branches, and the branches will show it in their block credit in each of their 3Bs, depending on the number of employees or the turnover distribution ratio. So Rajasthan will get its share of ineligible credit tax, Gujarat will get its own, Maharashtra will get its own. That is the thought process. Make no mistake, Mediclaim is one example. This will also apply to tax eligible credits. So you might have comprehensive insurance cover for your stocks. You might have comprehensive insurance cover for your assets across the country, all your laptops across the country. Now, the insurance service is consumed at those locations where the laptops are there. So, it is like that security. You are paying for 30 security, 10, 10, 10. Like that, you are paying here. So, either you split or you take it to ISD. So, this is something which will go into ISD. Am I clear of these examples? Software licenses is a big mess. Because if you have 100 laptops, you are buying 100 licenses for SAP or Microsoft or whatever. It is now for a license driven, and that license is used on a particular device. So if that device is lying in another state, the receipt of the service is in that state. And this again, today we are doing is to cross charge. I would believe that cannot go through cross charge. It will have to come through the ISD route. Travel expenditure. Employees traveling randomly anywhere. You will now have to say that this employee is tagged to this state. And if somebody else is paying for that travel cost, it will have to go through ISD. Same way accommodation. So these are areas which will be a problem. Local repairs. Now, please distinguish between local repairs and the corporate office repairs. Corporate office repairs is not going to be an ISD because that's consumed by the corporate office itself. But if there are local repairs paid centrally, leases, you are paying for leases for assets across the country, motor car lease, rent a cab, all those things. If you are paying centrally, some of these, I am aware people are already decentralized, paying decentrally, like security and GTA. But if these are expenses which are relating to all India consumption or receipt, in those cases, you will have to move it, either decentralize it or move it through the ISD. Now compare that with something like our consultancy increase. ये तो सब clear examples हैं. Now let's look at a consultancy increase. I help you in your, let's say, all India tax compliances, or teams do all your GSTR 1, 3B, 9, 9C, etc. And we raise a consolidated monthly invoice. A very common model. Is it ISD or is it cross charge? How many say ISD? Few. How many say cross charge? Many others are undecided. Yeah. Understand who is receiving my service. Each of you represents the tax team. We started by saying, as a tax team, you are providing a support service to all the branches. Now you have to answer whether I am rendering a service to you, representing the head office, or am I rendering a service to the 20 branches and their branch heads? From my perspective, I think I'm rendering services to you. It is you who takes my GST, who sends me data, who takes my GSTR1, reviews it, and instructs the branch head to file the return. So there is that layer between me and the branch head or the branch tax person. If at all, in many cases, there may not be a branch tax person at all. Smaller branches, mein wo hota bhi nahi hai. It's only you who in Bombay who's doing everything. Right? So my services are consumed by the head office for further providing a service to the branches. Look at that example which has been given in the draft circular. Engineers sitting in Mumbai repairing laptops for the entire branches, they said is a cross charge. Is a service given by the engineer to the branches. Now, for providing this service, if that engineer needs the support of some third party, that also becomes a part of that service. Just like his own effort is a part of that service, efforts of third party to supplement him is also part of that service. And therefore, these items will go through cross charge and not through ISD. Am I clear? Same way you look at lawyers and many other types of common expenditure. Many of those expenditures you will find may fit within the concept of cross charge. There may be a consumption of the service at the head office to provide a further service to the branches. Now, if we open up our thoughts into this thought process and say that no, everything which was cross-charged now becomes ISD, that is one extreme way of looking at it. But if we open up the understanding to this context, and then let's read the definition. I purposefully kept the definition much later, and I wanted to build up this entire background before we really go to the definition. This is the amended definition. Now read the definition from that concept of receipt of service versus benefit of service. And then you'll understand what we mean by this. Input service distributor means an office of the supplier of goods or services or both, which receives tax invoices. So you have to receive a tax invoice in your name, which is fine. Towards receipt of input services on behalf of distinct persons. So you have to receive an invoice towards the receipt of service on behalf of a branch. You don't have to receive the service. You have to receive an invoice on their behalf. That is how one would look at it. You will link invoice on behalf of with the invoice and not with the receipt of service itself. So that is where I think the difference will have to come in. And then, of course, we are told that this is the definition. And then section 1020 subsection 1 now makes it mandatory from a notified date. Now means they still to be notified. It makes it mandatory that this office will have to register as ISD and it will have to distribute the credit only. It cannot claim the credit itself. It will have to work through the ISD and a distribution model. Then section 22 talks about the manner in which the distribution will happen subject to rules, which we'll go into in a minute. And then we are told that if you are distributing in excess, then the recovery, and this is an interesting disconnect and a big issue which will come in, is that the recovery for any errors will be at the branch level. Now this, please understand this. ISD will receive an invoice of 100 tax component. It distributes 100 to 5 branches in some ratio, 30, 20, 10, etc. The question of this entire exercise will not come at the ISD level. It will come at each of the 5 people level, branch level. And that 30 rupees which has been claimed in one of the branches, his officer will say कि ये 30 बराबर है कि नहीं. इसके लिए वो स्टार्ट करेगा कि 100 बराबर है कि नहीं, उसका डॉक्यूमेंटेशन है कि नहीं, उसके बाद वो 30 बराबर है कि नहीं. और अगर कुछ भी वहां उसको डाउट लगा तो notice will be issued by the branches, not by the head office. Now this is the biggest disconnect in ISD and biggest challenge which we see today. Whatever invoices on which you claim credit, you are answering, most of those invoices are in Maharashtra. So you are answering those questions to Maharashtra. Now, the Xerox copies of each of those invoices will go to each of the 20 locations which you have. And each of those 20 locations, officers will start questioning that. That's the complication in this entire ISD. That's why we are little bit cautious in really approaching ISD in a full-fledged manner. While we believe that we will need to do something, but I think a selective pick and choose approach may be a better word rather than putting everything and exposing each small expenditure for queries by those 20 field formations. There will be somebody in Assam who will not understand the requirement of a particular type of a service. So he'll say, this service was not required. Maybe it's a fake invoice. Somebody else will start an investigation saying, no, this person is not valid. This is not in the course of furtherance of business. Somebody will start interpreting this is a block credit. All that investigation will start from 20 different locations in different manner. And that's where I think we'll have to be a little bit cautious about this entire approach. Now, how do we distribute it? We are told there's a rule 39 which has been amended recently. We are told that the ITC available for a month is to be distributed in the same month. And we have one more slide which goes into the entire forms and how to go about doing it. But how do you distribute? We are told that for the credit which is identified to a particular one unit, you give it to that unit. If you have some credits which go only to 3 units, let us say you are having a regional setup. So you have Western zone, you have Central zone, you have Northern zone, etc. And there are certain expenses which are only related to the Central zone. Then you will distribute the credit only to the GSTNs within the Central zone. And there will be some credit which will be attributable to all the recipients. In that case, you will distribute it to all. So it's either identified, cluster of recipients or branches or all. So ये 3 लेवल पे अभी जैसे आप रूल 42 में करते हो 2 लेवल करते हो, एक्सक्लूसिवली टैक्सेबल एंड कॉमन. अभी यहाँ पे 3 लेवल करना पड़ेगा. One is exclusive to one branch, common amongst a group of branches and common across all the branches. और तीनों का अलग अलग मेथड पे जाएगा. लॉजिकल मेथड है वो, रूल ऑफ 3 है बेसिकली. And that rule of 3 is based on the turnover of the previous financial year. Turnover as per GST returns. Not turnover as we understand from our state trial balance. We all understand the differences between these two. There could be various reasons because of which there will be difference. If a particular branch is not there in the previous year, then you pick up the previous quarter and accordingly take up the calculations. And then again, we are told the input service distributor will, when it gets the invoices in its portal, it will first bifurcate into eligible and blocked and distribute eligible separately, blocked separately. And they will have to specify that this is block credit and I'm distributing a block credit. And then the blocking will happen not at the ISD level, it will happen at each of the branch level based on that. Integrated tax will be distributed as integrated tax. ST and CT will get distributed as IT for over other states branches. If within the same state you have 2 registrations, then it will be as IT and CT. Otherwise, it will be as IT. Because naturally, if it's in another state, you have to do it. The place of supply will become the other state and you have to do an IT. There's a format of an ISD invoice, so you'll prepare that. If there are some errors or omissions, you will issue a debit note, credit note for adjusting those errors or omissions. If supplier issues a credit note, even that credit note will have to be distributed to the respective branches. Now, this is a bit of a challenge. We are aware that, you will receive an invoice for 100 rupees from the supplier. You have distributed the credit. Now, later on, the supplier gives you a discount of, let's say, 10 rupees. So you are now told that that credit note, which is the GST credit note, will also be distributed to the branches. But please understand, invoice may be in a particular period. Credit note may be in a subsequent period. So even though the credit note is in a subsequent period, the ratio which you will use will be of the original invoice period. Because you had distributed, let's say, for simplicity, let us say you have 2 branches and 60-40 is the ratio. So in the first month, when you got the credit, you distributed in 60-40. Now, when the credit note comes, your ratio has changed to 55-45. So you can't use 55-45. You will have to go back, link it back to the original invoice, look at the ratio of that month, and then apply that 60-40 ratio. Okay, now if you have multiple periods, it's going to be practically it's a mess if you have a credit note also in this type of a situation. So this is what procedures we are told about, and maybe we quickly just summarize the difference in the procedures and the concept between. We understood what would be cross charge, what would be ISD, but let's understand in terms of documentation, in terms of processes, how things change, how are they different, and how will you implement this. So just to summarize, as a concept, ISD is the supplier's input tax credit is distributed. It's not an output at your end. You are just distributing the input tax credit through a separate GST registration number. Whereas when you look at a cross charge, we are all implementing it. We treat input tax credit of the supplier as my own input tax credit across the country, claim full credit, and then raise an output tax, plot the purchase sales, and then claim the credit in the recipient state branch. As of now, for a cross charge, we raise just like a normal invoice, we raise an invoice. We generate an IRN, we do a GSTN of the recipient, and just like a normal tax invoice, it's only that normal tax invoice is to an external customer, whereas cross charge invoice is to your own branch. That's the only small difference. Otherwise, it's exactly similar. But when it comes to ISD, there is a separate ISD distribution invoice. There's a format for that, and you will use that format. And for that format, IRN is not required. So, because today most of us are above a limit of 5 crores, but for ISD invoice, there is no IRN. For the brand transfer invoice or the cross charge invoice, you will have to issue an IRN. As far as valuation is concerned, the question of valuation does not arise in ISD because you are anchoring only on the tax component. There's no concept of valuation or consideration or anything. So only tax component, अगर 5% है तो 5% में ही जाएगा, 2% है तो 2% में जाएगा. Of course, there's no rate like 2%. But whatever be the tax rate applied by the supplier, same gets distributed. But when you do a cross charge, you are valuing it and then applying an 18% tax rate. Accounting wise, I think there's a big change. So today, when you're doing a cross charge, what you do is you account for the invoice in your books. You treat it as branch sales. Output and output tax goes in your output tax account. Input tax credit will go in the GL of the branch. and there will be a purchase in the branch. So branch will say HO purchases and HO will say branch sales. When you consolidate your accounts, branch sales and HO, branch purchase and HO sales will nullify. And credits, of course, has flown through. But when it comes to ISD, you will not account for any sale or purchase. Because there's no sale, there's no purchase, there's no value. You will straight away have an ISD GL in your books, which will take all the ITC in that account. And through a JV, you will distribute that ISD into the state level ITC GLs. That's all that you will do. It will be just a journal voucher or a journal entry. We'll have to see how to operationalize it in SAP and other ERPs, but this is how it will be. So there's a fundamental difference in the way this entire accounting of the transactions will be. Now, some legal provisions, and these are questions which keep on coming. What happens to 180 days? You have this requirement that after 180 days, you have to reverse the credit. Control is at the HO level, but please understand, reversal will be at a branch level. So after 6 months, today you have distributed the credit as ISD. You will keep a track of whether payments are made or not. After 6 months, you realize payment is not made. You will have to advise the respective branches to proportionately reverse the credit because of the 180-day condition. So 6 branches will do a proportionate reversal of ISD based on the ratio of that 180 days ago. Because that was what they took. Whatever they took, they will reverse. So this is going to be a bit of a mess because entire payment, control, everything is happening from the head office. And the reversal is going to happen at the branch. I hope I'm not confusing you. Supplier unpaid tax. Now, this, of course, is not a very commonplace scenario, but we are aware of the rules which say that at the end of the year, you will check whether your suppliers have filed 3B. आपका 2B में आ गया, लेकिन 3B में नहीं आया. So, you are required at the end of the year to pay back that tax along with interest. Now, here also, the reversal will be at the recipient unit. How are they going to track it? We were a little bit baffled because essentially in the ISD return, there is no place where they plot the supplier's GSTR 3B filing status. Unlike in GSTR 2B, where we get a recipient's filing status, in the 6A document, there is no such reference. So that's a challenge. Either you have to go manually and check one by one on the portal whether the supplier has filed 3B or not, or you have to just keep it to open-ended as a chance. Credit notes we talked about, it has to be distributed through the ISD in the same manner as the original invoice, which basically now means that we are going back on a relaxation given 4 years ago. If you recollect 4 years ago, when GST was implemented in 17, there was a requirement that each credit note should be linked with an invoice. Then lots of problems came, and therefore I think in 18, they removed that condition. They said, okay, credit note can be given independent of the invoice, it need not be linked with an invoice. Right? And all the portal changes also happened based on that. Now we are again coming back to that same thing. We are saying credit note will have to be reversed in the ratio of the original invoice. So unless you know the original invoice, how can you know the ratio of the original invoice? So indirectly, you are bringing in a linkage which is not any longer there in the law. Through a circular, through some circumvent manner, we are bringing in that type of a linkage. If I have to implement the credit note reversal under the ISD route, I can implement it only if I know which credit note is linked with which invoice. Otherwise, I cannot do that. So that's the challenge which we are coming in. Rule 42 by the recipient, again, branches. Principle is every reversal, everything, the tax credit is claimed by the branches. And if the credit is claimed by the branches, all obligations and restrictions, reversals, everything will be at the branch level and not at the ISD level. ISD is a sacrosanct thing. It has only one thing to worry about: file the return in time. If not filed, pay late fee. Beyond that, ISD has nothing to do. And that's what complicates this entire thing. And the last and the more tricky part, which we just yesterday evening, our teams, we were just sitting across and seeing how to deal with this. And honestly, we don't have an answer, but it's an important issue which we need to understand. 2 years back, through a circular, we have said that if a credit reflects in my portal, I have to claim it immediately and then show it as a temporary reversal if it is not accounted in my books. All of us are aware of that circular and the rigors and the pain which we are going through because of that. Same way, when you look at ISD, we are told any credit which appears on the portal has to be distributed in the same month. Now let's take an example of some consultant uploading a credit into your ISD registration. But you have not accounted for the invoice because invoice is not received, it's in transit. Very commonplace example. Now, the rule forces the ISD to distribute this credit to the branch. Right? We have this rule which says ITC available for a month, and this available for a month is basically the amount flowing through the portal, is to be distributed in the same month. So, you have not accounted for this invoice, but as ISD, because it is coming in your portal, you will have to distribute it to the 5 branches. The branch receives this credit. उसको तो visibility भी नहीं है, और अगर visibility भी है, what does he do? Can he claim the credit? Ideally, because he has not accounted for the invoice, he can't claim the credit. He has to defer it. But can he show it in a temporary reversal there? The answer is no, because the temporary reversal is now auto-tracked through one statement. And that statement deals with normal credits and not ISD credits. So until they amend that, we have a problem that while legally the branch will be required to temporarily reverse this credit and reclaim it as and when the account book is, the invoice is booked in the ISD books. But how is he going to do this? That's a bit of a challenge, and portal also may not permit it. So that's where we see a little bit of a situation, and we'll have to walk the bridge as we move ahead into that. Summarize the workflow. Typically, what happens is GSTR1 supplier will file GSTR1. पहले तो आपको ISD number लेना पड़ेगा, वो सब suppliers को देना पड़ेगा, and then they will upload in that ISD number. So on 11th, right? All of us aware of this date. Step 2. Moment he files it, immediately it will come in your GSTR, not 2B, 6A. ISD के लिए 2B equivalent is 6A. Okay? वो आपको 12th को डाउनलोड करना है. 12th को करना पड़ेगा डाउनलोड, because you have a return to file on 13th, which is your return. आपने पोर्टल का डाउनलोड ले लिया, वो उसने बता दिया कि आपके 100 सप्लायर्स ने इतना इनवॉइसेस दिया. वो 100 इनवॉइसेस आपको इमीडिएटली वो 3 बास्केट्स, वी टॉक्ड अबाउट 3 बास्केट्स, यू रिकलेक्ट? ब्रांच लेवल, क्लस्टर ऑफ ब्रांचेस एंड ऑल इंडिया. वो हर एक इनवॉइस को ये 3 बास्केट में डिवाइड करना है. 100 इनवॉइसेस को एलिजिबल इनएलिजिबल भी डिवाइड करना है, और उस बेसिस पे आईएसडी इनवॉइस बनाना है, और 13th को वो रिटर्न फाइल करना है टू डिस्ट्रीब्यूट दैट आईएसडी टू द रिस्पेक्टिव ब्रांचेस. सो 12th को डाउनलोड नहीं करोगे तो 13th को फाइल नहीं करना, राइट? और 13th को फाइल करोगे तो 14th को ये रेसिपिएंट के 2B में आ जाएगा, राइट? एंड देन द रेसिपिएंट विल स्टार्ट इट्स मैचिंग, बिकॉज वो ये 2B डाउनलोड करेगा, फिर वो अपना नॉर्मल प्रोसेस जो आज के डेट में 13th 14th को अपना 2B आता है, उसके बाद जो नॉर्मल प्रोसेस है दैट विल कंटिन्यू, एंड देन ब्रांच विल डिसाइड उसको जो आईएसडी में से जो आया उसमें से कितना एलिजिबल है कितना इनएलिजिबल है, और अकॉर्डिंगली अपने 3D में डिस्क्लोज करेगा. सो moral of the story, 11, 12, 13, 14, you have to be super human beings. Right? So that's the challenge. That's why we need to be careful about a whole hog implementation of ISD. 2-3 challenges. One is this strict deadline. You are going through in a circumvent manner. And this circumvent manner you are doing not only for invoices, you are doing it for credit notes, you are doing it for reversals, because everything will have to go through this process. And after doing all of this, you are exposed to audit and queries at each of the multiplier levels. Today, all those audit and queries happens only at Maharashtra, which will then happen at multiplied by 18 or 20, depending on how many locations you have. So that is where I think we have to be. It's good to say कि नहीं कर दो implement, to the last T we will implement it. But I think somewhere we will have to find a interpretation which is practical and workable. And that workable situation would be to say that yes, I need an ISD. We can no longer shy away from the fact that I need an ISD. There will be some identified pocket of items which will have to go through ISD, like a mediclaim insurance. And those items I implement through ISD, and for other things, for the small day-to-day expenses, which again can be a common expenditure, perhaps if we are able to build up an argument to say that no, this is not ISD, this is actually a receipt of a service by a head office, I think that is a sort of a balanced approach which one will have to bring in into this entire situation. So next steps. First, and of course, the $1 million point is in your P&L of, let's say, 500 line items of expenses, identify which of them would be ISD and which of them would be cross-charge. Now, I'm sure we have clients who will go into a little bit of more technical details, and rightly so, to say that we can't just look at GL also. We will have to go to the live situation case to case. We started by saying security is ISD, right? But when we said security is ISD, I took an example of 10 in Bombay, 10 in Chennai, 10 in Delhi. So we said 10 in Chennai and Delhi will go through ISD. We never talked about what about 10 in Bombay. That 10 in Bombay perhaps can be a cross-charge issue. Right? So the same security, depending on the facts, can become a cross-charge or can become an ISD. Look at bank charges. If the bank charges are generic bank charges, they might be cross-charge. But if the bank charges deal to relating to a guarantee given for a project which is being executed by one particular branch, maybe the service of that guarantee is received by the branch. That will have to go through ISD. And when we try to implement this, it's easy for me as a consultant to say कि आप एक काम करो बैंक चार्जेस का GL लो, उसमें 5,000 लाइन आइटम होगा कम से कम, उसमें से 4,000 लाइन आइटम 50 रुपया 100 रुपया होगा, right? I hope you are able to relate to what I'm saying. Please identify each one, find the purpose of the bank charge, and then decide ISD or cross charge. Right? And that you will decide only when the GL comes to you. But before that, bank would have done the transaction and uploaded his GSTR1. And he needs to know whether to put it in your ISD registration or in your normal registration, because the GST numbers are different. So first thing is try putting 2 GST numbers with the bank. That itself is going to be a challenge. They are going to say, I will recognize only one GST. I am not going to recognize 2 GSTs, and then you tell me, you will tell me that tomorrow these items have to go in registration number 1, these have to go in registration number 2. Many of the vendors will not agree with that approach. They will say either put everything in ISD or everything in normal. So that is going to be your first challenge. Then comes this breakup. So these are the points which we are going to practically face challenges. And in some of those areas, maybe one can think whether you can decentralize procurement. Maybe like something like a consultant. While I might believe that it's a cross-charge and not anyways a subject matter of ISD, some clients might come back and say that why don't you bill individually instead of billing at one location? So that just like security is being billed individually, so then there's no issue only to start with. So maybe some type of a balance in a practical approach, one will have to take it up. So I think that took some time, but I think it was important. And of course, as time progresses, we will have one-to-one discussions with each of you to understand your specific situation, and we will have to deal with and customize the the implementation, just like what we did when GST was implemented in 2017. We had customized meetings and customized solutions for each of you. We will have to think about a customized solutions for each of the specific organizational requirements. But I think these broad principles which I have explained might be helpful for you to think through and come up with some more relevant questions and doubts to our teams. These tax rate changes we've done earlier, so I'm not going to spend time on this. This is important. So I'll spend some time on this part of it, which is the discounts and the credit note requirement. Now, this is again something, in a way, if you look at it, this is the only circular which end result is bad. Process is bad in many things which you must have sensed in my talk till now. But here the end result is a problem. And what this basically the circular tries to say. The background of this entire circular comes from section 15. Now, if you recollect section 15, 15 says the supplier has to pay tax on the value of the supply. So he pays tax on his invoice value. but the value of the supply excludes post-supply discounts. So I'm selling you goods at 100, subject to a condition that if you sell this much quantity in a year, I will give you 10% discount. Later on, I'll give you. So even though I've sold you at 100 today, later on, I'll give you back this 10 rupees. So for giving that post-supply discount, typically you issue a credit note. And when you issue a credit note, there is a section 34 which says that a credit note which is issued has to be issued within particular timelines. And if you do that, you can adjust the tax which was originally paid. So because when you raise the invoice, you paid tax on 100. Now you are giving a credit note of 10 rupees. So you want to get that 1.8 rupees back because your actual sale is 90 only, 100 minus 10. So for getting that 1.8 rupees back, section 15 somewhere says that the adjustment in the value will be allowed only if the recipient reverses the corresponding input tax credit. Looks logical because when you raise an invoice of 100, you paid 18, customer got a credit of 18. Now you are giving a credit note of 10 and you want that 18 may say 1.8 back. The government can give you that back only if the recipient reverses his 1.8 which he had already taken. Right? And if you refer the original process flow of GSTR 123, there was an elaborate mechanism to ensure all of this, but that never happened. So today, what we are stuck with is a situation where section 15 says that I will get minus 1.8 only if my customer has reduced 1.8 from his input tax credit. But there's no mechanism for me to prove or for the officer to prove anything. Portal has nothing to do about it. There's nothing available on the portal. So how do you do it? And that's where the controversy started at a ground level. Many officers insisted that you get us proofs that the recipient has reversed the input tax credit. Now, recently, just few months back, 17, 18, 18, 19 assessments have closed. So today in 23-24, officer says, आपने 17-18 में क्रेडिट नोट दिया था, उसका प्रूफ लेके आओ कि उसने रेसिपिएंट ने रिवर्स किया है कि नहीं. He forgets that बीच में एक पेंडेमिक आया जिसमें काफी बिजनेसेस ही बंद हो गए. So I may not have any relationship with the recipient today. Going to him, getting a certificate from him, and again वो सर्टिफिकेट लॉ में कहीं है नहीं, तो रेसिपिएंट भी बोलेगा कि मैं क्यों दूं सर्टिफिकेट. उसका अपना स्टोरी हो सकता है, उसने क्रेडिट लिया नहीं है, लेके रिवर्स किया है, उसका और कोई डिस्प्यूट चल रहा है डिपार्टमेंट के साथ. So it was becoming very, very subjective and messy in actual ground level in handling it. So this is the background. So CBC बोलता है ठीक है ना, let's provide a mechanism. And then mechanism, they got inspired by another circular which they had issued 1 year ago, which was a beneficial circular about 2A 3B mismatch. All of us have used it. 2A 3B mismatch हुआ, वेंडर से सर्टिफिकेट लेके आओ, अगर एक अमाउंट के ऊपर है तो सीए का सर्टिफिकेट, वरना सेल्फ सर्टिफिकेट. All of us have used it. So they said, let's implement that type of a principle here. Wherever the tax amount involved in the credit note is above 5 lakh rupees, get a CA certificate from the recipient. And if it is less than 5 lakh rupees, get a self certificate from the recipient. So far, so good. Only thing is, in case of 2A 3B, it was only for matched and unmatched. Matched वालों को नहीं देने, unmatched वालों को ही देने. So if you have 10,000 lines, your unmatched will be 500 lines. Maybe larger depending on the discipline in the organization. But 9,500, which was happening in normal course, you don't need to do anything. Here, there is no such relaxation because there's no matching process of this. So, if you have issued 1,000 credit notes in a year, for each of those credit notes, you will need to do this, which is a pain. The larger pain is slightly different. In most of the organizations, credit notes are not issued only for discount. You all tell me what you issue credit notes for. Services, service recovery. Price differences, so discounts again. Goods return. Anything else? A major part of credit note, I think you all are missing out. Shortages, yes. A major aspect you all are missing out. Cancellations. Go through your monthly GST R1. You will find there will be at least 10-20 lines which will internally nullify each other. आपके एसएपी में किसी ने इनवॉइस बनाया, गलत बना दिया, एसएपी कैंसिल नहीं करने देता है इनवॉइस, क्या करोगे? इमीडिएट मोमेंट क्रेडिट नोट बनाओगे। ये आपके ही बंदे ने इनवॉइस बनाया है, आपके ही बंदे ने क्रेडिट नोट बनाया है, आप एक्सपेक्ट करोगे कि कस्टमर आपको सर्टिफिकेट देगा? एग्जामिन आपके ऑर्गेनाइजेशन में ऐसा कितना होता है? Have you seen organizations where this quantum is much, much large? Some organizations are disciplined, but invariably, even in very disciplined organizations, this is very common. Cancellation not of a discount or a service. This is a cancellation of an error. So technically, this circular doesn't apply to it. But no officer is going to understand this. He is going to say, ये circular credit note का है, जितना credit note है उतना मुझे सर्टिफिकेट लाके दो, उतना मैं अलाउ करूंगा, जितना नहीं है वो मैं डिसअलाउ। This is what is going to be the mindset of the superintendent or the inspector with whom you are going to deal on a day-to-day basis. Now understand the problem which we are talking. And that's where I feel this circular is something which really needs a little bit of a relook from the government. Otherwise, जो 2A 3B का हमने 5 साल का मैच अभी बोलते हैं कि मैचिंग होके ही जा रहा है, so mostly as of today I think the process is streamlined on the input tax credit front. At least how many of you agree with me? The pains which we were facing in 18, 19, 19, 20, 20, 21 abhi nahi hai. This is a new pain which is starting, which will be there for the next 5 years. Right? So somewhere, please, I know many of you here are from the tax or the accounts team, and with due respect to the senior managements, tax and the accounts team receives the last priority in an organization. But somewhere you will have to push through and bring in a user discipline. I don't know how we are going to do it, but standing here, I need to tell you that please push through. Make sure that these instances of invoices and cancellations are reduced to the bare minimum. Set up better processes in organization. Take that lead if required. Fight with your seniors for this point. At some point of time, they'll appreciate this. I know it's easily said than done, but this is going to be, otherwise it's going to increase a lot of pain and a paperwork for you 3 or 4 years down the line as time progresses. So coming back to the circular, what it talks about, it says that depending on the 5 lakh cutoff, either self-certificate or a CSCMA certificate. Now look at the CSCMA certificate. They've said, interesting, huh? The way they have worded it. The CSCMA certificate may include details as under. May include. क्यों बोल रहे हो? मैं तो बोलो shall include or don't say anything. But they say may include. Details of credit note, to that it's fine. Relevant invoice numbers. We just few minutes back said that the linkage of a credit note with invoice number is done away with. Now the circular says may include details of credit note and relevant invoice numbers. So when you are going to ask for a credit certificate from your client will give you at the most, firstly, many of them may not give you certificates. Some of them will cooperate. They'll give you certificates. They'll give you a general certificate. Then you will say, नहीं इसमें relevant invoice number नहीं है. Client को क्या consultant बोलेगा, but this is May, so why should I give? और आपका ऑफिसर बोलेगा कि नहीं सर्कुलर में तो लिखा है, तो सर्टिफिकेट का भी क्या वैल्यू बच जाएगा? Right? Again, there's a problem. ITC reversal details either through DRC 3 or GST 3B. अभी काफी clients ने credit लिया ही नहीं है. So naturally, he'll put a note there saying that because I have not claimed the credit, the question of reversal does not arise. Some of them will be able to give. Let's say you are told to give a certificate like this. What will you do? Your supplier comes to you. He says, I made a mistake of plotting an invoice of 100 rupees and I immediately did a credit note of 100 rupees. आपने तो कभी क्रेडिट लिया ही नहीं ना, आपका बुक्स में ही नहीं है ट्रांजैक्शन, तो आपने क्रेडिट लिया ही नहीं, वो आया आपके पास सर्टिफिकेट दो, ये रिवर्स है. What is going to be your advice? Will you be giving that certificate to your suppliers? Okay, will you give a certificate saying that I have never claimed the credit? How will you expect your customers to give you certificates? If as a supplier, if as a customer you are not ready to give a certificate to your suppliers, understand the mess this is going to create. Interestingly, एक सेंटेंस में बोल दिया है कि फॉर द पास्ट पेंडिंग असेसमेंट्स these certificates may be acceptable. Nice. एक सिंगल सेंटेंस में पूरे सर्कुलर को एक रेट्रोएक्टिव एप्लीकेबिलिटी दे दी है, just by making one innocent sentence as if they are giving a relief that this certificate, if you present for past periods, that also will be acceptable. Now, अभी तक जो ASMT आ गया, DRC हो गया, वो सब हो गया. Whatever is in pipeline, do you expect the officer not to insist on this certificate? They would insist, right? So, in that sense, there is a retroactive applicability for this circular. We talked about this error in generation of invoice. Next, again, an interesting clarification or an amendment both is a situation where you are exporting goods on payment of tax. And we've discussed this with a few clients where this was impacting. Now, whenever you export goods, you have an option of either zero rating by way of an LUT or by way of a payment of tax and claiming refund through the customs route. And we are all aware that the customs route is a much easier and a less messier route. So people prefer that on payment of tax, customs में से थोड़े दिनों में आ जाता है. The challenge is that when you export goods through the customs route, the valuation for the purposes of customs is frozen on that day and defined on that day. But GST may value keeps on changing depending on situation. So you might have a post-supply interest coming into your place, interest for delayed payment. Or there could be some contractual terms where customs will only recognize FOB, whereas your contractual terms could be CIF. And therefore, your GST invoice and a commercial invoice can be higher than the customs invoice and the shipping bill. So what was happening was the refund was getting restricted to the customs document. And so, for example, if your customs valuation is 100, but your GST valuation is 110, you have paid GST on 18% on 110. 100 का ऑटोमेटिक रिफंड आ जाता था, बाकी का जो 10 रुपया है उसका रिफंड कैसे लेने का देयर वाज नो मैकेनिज्म. सो नाउ वी हैव प्रिस्क्राइब्ड अ प्रोसीजर कि 10 रुपीस 100 रुपीस का जो 18% है दैट विल कम इन द कस्टम्स रूट द वे इट इज फॉर द एक्स्ट्रा व्हिच यू आर गेटिंग on which you have paid GST and you want a refund, go through the GST route. So apply an RFD1 and through RFD1 you can file the relevant details within 2 years. GST officer will verify for that 10 rupees and then only give you the refund. But their process at least we have now operationalized for the differential component. This is an important amendment and I would say a lot of sense has prevailed in bringing this amendment. We are aware of 16.4, last date September, earlier than it increased to November. There's a due date for claiming all your time limit for claiming all your refunds or your input tax credits. Now, when sometimes you delay your returns or some credits are missed out, whether you lose that credit totally was a question which was being litigated in various courts. Most of the courts came up with a negative verdict. They came up by saying that the government is entitled to prescribe a time limit. It is constitutionally valid. And if you have missed the bus, you have missed the bus. Sorry. That has been the general consensus of most of the decisions. Of course, one small relaxation came in the last decision of M Trade Links, which went into saying that, okay, earlier it was September, later on they made it November. So let us interpret everything to be November. So that was a small concession in one of the judgments, but otherwise, most of them were against the taxpayers. And therefore, people were stuck with a dead loss on this situation. Now, understanding the challenge, there is an amendment to Section 16, which says that for periods up to 2021, we will treat the time limit to be 30th of November 2021. यानी आपका 17-18 का रिटर्न आपने 20 में भरा है या आपने क्रेडिट 20 में लिया है, it will still be valid because for that period the time limit is now extended up to a single date 30th November 2021. Am I clear? Now they have also said that if you have already paid the tax, 17-18 का assessment हो गया है सब और वो assessment में ये issue निकला है, so either you are litigating or you are paid. Only two things can happen. If you have paid the tax, no refund will be given. If you are litigating, naturally you will not pay because the law is amended. What is the message we are passing? Don't be conservative. हमको लगता है कि नहीं भर के बात खत्म हो, why keep it pending? बट बात खत्म कर दिया तो खत्म हो गया, अभी वो वापस नहीं मिलेगा. आपके भाई ने पेंडिंग रखा तो उसको बेनिफिट मिल गया. एंड दिस इज द मैसेज, एज इज वेयर इज बेसिस. आप ढूंढोगे तो कम से कम 15 से 20 जगह उन्होंने यूज किया है एज इज वेयर इज बेसिस. तो एज इज वेयर इज ही करना है तो मैं जेब से टैक्स क्यों भरूं, मैं झगड़ा ही करूं ना, क्योंकि मुझे मालूम है कि 2 साल के बाद आप वापस एज इज बेसिस करने वाले हो उसको. I think that's the message which we are passing through when everywhere we say if you are paid, forget it. I can understand output tax may you'd say ki paid to forget it because you have collected it. But ITC is from my own pockets. I have reversed ITC from my own pockets. At times I have reversed it along with interest and penalties. And now you come and say कि नहीं अगर आपने फाइट किया रहता तो ठीक है ना, तो आपको नहीं भरना पड़ता, लेकिन आपने भर दिया है, टैक्स भी भर दिया, इंटरेस्ट भी भर दिया, पेनल्टी भी भर दिया. थैंक यू वेरी मच. That's the challenge of this provision. So how does it impact you? I think we can look at various situations. एक है, you are very agile. आपने रिटर्न भरने के टाइम आपको पता चला कि आपने आईटीसी लिया है, लेकिन इनवॉइस डेट देख के आपने रिटर्न भरने के टाइम ही वो निकाल दिया, लिया ही नहीं रिटर्न. Because every month when you get an ITC register, you get invoice date as a column. So every month you have been very careful to filter on invoice date, checking whether you are eligible for that invoice or not. If you are not eligible, you will remove it. Sometimes you might debit it to the vendor account, or sometimes you might bear it as a cost, business cost. If you are not claimed in good faith and written off in your books, it's lost. Nothing can be done about it. Amounts claimed, but matters not initiated by the department, clearly matter gets resolved. आपने एक बार बोला कि चांस ले लेते, लेके देखते, डिपार्टमेंट ने अभी तक रेज नहीं किया, अभी रेज नहीं कर सकता है बिकॉज वो नवंबर के 2011-21 के पहले आपने ले लिया था. थर्ड सिचुएशन इज इंटरेस्टिंग कि आपने खुद ही वॉलंटरीली रिवर्स कर दिया और एनुअल रिटर्न के टाइम, या डिपार्टमेंट ऑडिट आया तो डिपार्टमेंट ऑडिट बोलता कि ठीक है आप ये भर दो, मैं क्लोज करता हूँ एडीटी 2 करके. So before you received a show cause notice, because there's a distinction between show cause and pre-show cause. So here we are saying without a show cause notice, you have reversed the credit along with maybe interest and penalty. तो क्या करेंगे? So here we are clearly told no refund of tax already paid or ITC already reversed. But is there a difference between a refund and a recredit? Is a question which we need to think through. Depending on materiality of the amounts, I would believe that there's a difference between a recredit and a refund. I'm not claiming a refund, but if I had wrongly reversed a credit at some point of time, I'm always eligible for recredit. And now with this amended law, it's clear that it was an error of my reversal. And nobody has determined it. There's no show cause till date. Since there is no show cause till date, it's not a situation where the matter has achieved finality. So can I not examine a recredit of this already reversed input tax credit? Is a question which one will have to look at. Depending on materiality, one may like to look at the recredit possibility in this situation. Now, If the matter is pending, show cause आ गया, matter pending है, show cause, appeal, whichever level, matter gets resolved because of this. Because you are in litigation, naturally it gets resolved. आपने जो प्री डिपॉजिट भरा है, because when you agitate the matter, you have to pay a pre deposit. Can you claim a refund of that pre deposit? I would believe that's a bit tricky, because when you talk about refund, pre deposit, you are going for a refund, and there is an express bar on refund. Refund and recredit is slightly different. So here, refund can be a bit of a challenge. Another interesting dimension which comes up is you have concluded the matter by paying off tax along with interest and penalties at any stage. We said matter resolved, भूल जाओ सब. But भूलना क्या है? The provision says no refund of tax already paid. There is no prohibition for refund of interest or penalties. And in many cases, we've seen interest is equal to tax. 5 साल बाद आते हैं, so interest itself is at times equal to tax. At least that is a possibility which one can examine. Okay. Today, because of a retrospective amendment and these timelines, my entire act of reversing was in error. My entire act of reversing the tax was in error, including that reversing of interest and paying of interest and penalty was also error. For tax, you are saying I can't claim refund. But there's nothing which says that I can't claim a refund of interest and penalties. So can I not at least examine a refund application for interest and penalties for already concluded matters? This is something which we need to think through on this. That takes me to one more very, very circumvent way of dealing with things. RCM. ये जो 16.4 था, वहां पे derivative controversy was that if in 1920 I realized that 1718 RCM has not been paid, and I pay that 1718 RCM in 1920, whether I can claim input credit or not, or whether that input credit is also hit by section 16. ये issue था, and it was a big controversy in earlier sessions. We have talked a lot about it, and there were both ways interpretations, strong interpretations both ways. Now, again, relief wants to be given. But look at the way in which we are giving the relief. We are told, this is through an explanation. So we are told, legal provision क्या बोलता है? कि for claiming the credit, you need a document. That document, in the case of suppliers who are registered and issuing you an RCM invoice, is the invoice of the supplier. So for example, if there's a GTA who is already registered under the GST, he is expected to give you an invoice, not collect the tax, but he's expected to give you an invoice, tick the RCM applicable tab, and it will come in your GSTR 2B as RCM applicable. So in those cases, that invoice and reflection in 2B is your basis of credit. And if the supplier is not registered, like a lawyer, most of the lawyers will not be registered. So if they're not registered, they don't have GSTR 1 to upload and 2A coming in your 2A. In that case, आपको बताया गया है, उसका इनवॉइस को मारो गोली, आप अपना एक सेल्फ इनवॉइस बनाओ. Section 31(3)(f) talks about an invoice to be created by you. While we have talked about it at the time of implementation, I'm aware many of us may not be actually generating those invoices. But the law requires you to generate a self-invoice. You yourself prepare an invoice as if you are the lawyer. And based on that invoice, claim the credit. That is the provision of the law. So what this circular says is, if 1718 transaction you have discovered in 1920 or 2021 or even today, and you want to pay RCM, you miss paying RCM on that day. And assuming that that supplier is not registered, most cases they would not be registered. What you can do is you can create a self-invoice today. And if you create a self-invoice today, your claiming is based for the financial year 24-25. So the applicable due date will be 30th November 25. This is what typically this circular tries to clarify. Now, naturally, there's a bit of a disconnect here because your transaction was of 1890. You are raising a self-invoice today. So is there a timeline for raising a self-invoice is a question. And somewhere this circular says that there might be a penal action of payment of penalty of 25,000 per instance. So that is one area which one will have to look at. There might be some delay in raising your self-invoice, which might imply some penalty at some point of time, but credit itself is not lost. Please understand the difference between supplies from registered dealers and supplies from unregistered dealers. Are we clear of this? Up to here? Now, the practical scenario is the third one also. There may be many suppliers who are registered under the GST law, but will not issue a tax compliant invoice and tick it in RCM. So there could be an example of a GTA who is registered. He has a valid GST number. But when he gives you an invoice, he doesn't put that tick, he doesn't generate a GST tax invoice and upload it in his port. Will you put it in the first basket or in the second basket? Because first basket में तो आपको timeline निकल गया, second basket में नहीं निकला है. You would want to put it in the second basket, right? Because that will give you the timelines up to today to claim the credit. And the officer will say, look, I can see this person is registered. And if he is registered, this circular does not apply to you. And I think the most common non-compliance is government itself. Today, we are aware of so many payments which we make to government as RC, which are liable for RCM. And we always assume that governments are unregistered. But the fact is, each and every government would be registered. Because RCM applies only for supply of services. It does not apply for supply of fixed assets. It does not apply for supply of scrap. And each department generates a lot of scrap. That's another thing, that most of the things they do is trash. But even otherwise, they generate a lot of scrap. So each and every government would be registered under GST. They might tell you the GST number, they might not tell you the GST number, is another thing. And this law doesn't talk about reflection into A. It says registered or not. So factually, whether they are registered or not is what has to be checked. And then the officer will come back and say that he's registered, so I will not give you this benefit of this. It's very easy for him to wriggle out of this circle. So that's where the challenge will come. Associated to this, we are now proposing Section 13 amendment also, wherein we are now bifurcating the time of supply between two parts, where supplier is registered and where supplier is not registered. And again, we are reiterating the principle that if the supplier is not registered, the date of issue by the recipient will be taken into. Date of issue of the self-invoice by the recipient. Again, there's an amendment in 31(3)(f) to say that we will now prescribe a timeline for issuance of invoice by the recipient. So all of this will have to be looked at in a common context. In a way, I think this circular to some extent represents an opportunity to clean up. Today, we have situations. Just a few days back, I was appearing for a hearing, and this was being discussed with the officer also. That the case was about RCM on royalty, mining royalty, which yesterday we have a decision to say that royalty is not in the nature of a tax, and there was a controversy that royalty is a tax and therefore there cannot be a tax on tax. So the point which comes up is, today if I pay that RCM, I can claim the input tax credit. I can generate a self-invoice today and claim the input tax credit. So why should I litigate? Is it an opportunity for me to clean up all my open areas, especially in the context of RCM? Because in all RCM cases, we are saying self-invoice is the key. So if self-invoice is the key, and if I generate that self-invoice today and claim the credit, it's an open-ended amnesty, and that timeline effectively becomes non-applicable to a large extent. Someone might say the only challenge is going to be interest. Because your payment of RCM might be, payment of base value might be in 1920. And today you are doing the self-invoice. So if the matters are in litigation or show cause has been issued, you can look at the amnesty, which we talked about, Section 73 amnesty, which we'll be talking about in a few minutes. So you can look at amnesty because there's a special amnesty which is being generated. So that also will get waived. So therefore, maybe it's a good opportunity to really relook at your accounts, see whether there is any pending RCM or an open position or an error or sometimes an interpretation issue. Some doubt is there. And if you have output tax, might be just pay and close. Why unnecessarily keep a issue today? Some clarifications on block credits. I think they are very specific and we've already talked about it in our earlier webinar. So all this we will not go into detail. Again, place of supply, specific type of a change, will not go into detailing right now. Let's straight away move to the amnesty scheme, which is being announced. So this is again an interesting opportunity, especially if we have pending notices. I think section 128A, which has been introduced by this finance number 2 bill, says that we will give you an amnesty subject to various conditions. And I think those conditions are important. First is you should have received a notice, and that notice should be under section 73. We are aware that today there are two provisions for notices, 73 and 74. 73 deals with normal situations, 74 deals with cases of fraud, suppression, or misstatement. So the notice should be under 73. It should be for financial year 17-18 or up to 19-20. 17-18, 18-19, 19-20. Any of these three financial years. Naturally, the notices will demand tax interest penalty. We are told if you pay up the tax, all interest and all penalties waived. Totally. So this, in that sense, is very important and an interesting amnesty scheme. We are told there will be no refund of interest or penalty, which has already been paid. Again, if you have been conservative, you are a loser. If you are an aggressive lot, you will gain. So that's the earlier also we talked about it. That's a common thought process which comes through in this entire situation. We are told that if the show cause has been adjudicated and you are in appeal, then also you'll get the benefit provided you withdraw the appeal. So you'll have to withdraw the appeal, and once you withdraw the appeal, you pay this amount and close it off. Of course, they have not come up with a detailed guideline on how to do this. So we'll wait for those guidelines. Maybe they'll have to enable the portal, because what happens is once the show cause is issued, the demand gets created in the portal. So somewhere they will have to, through a process, close that demand. And therefore, many of us might get excited कि okay, ठीक है, मुझे मालूम है इतना भरना है, कल भर देता हूँ. Let's not hurry, because you will pay in, let's say, a particular manner, like DRC3. Tomorrow they'll prescribe some another form, and if you're not done in that manner, then closure of demand will be a problem. So let's wait for a detailed guideline. We understand this, we create our cash flows, do the workings and everything. But for implementing and actually drawing the check and paying the money, I think we should wait for a detailed guideline. And once those detailed guidelines come of how we should pay, then only we should pay. I think that's the key which comes in this amnesty. In this, we have covered. Only challenge which comes is there are many cases where a show cause has not been issued. You are aware that there is a liability which can come up, but show cause is not issued. क्या करेंगे? You can't go in this scheme. Is there a way out? Just go and meet the officer. He'll be happy to issue a show cause. There's no outer timeline for issuing a show cause. Generally, in the earlier amnesties, they give you a timeline that, okay, only show cause is up to a particular date will be eligible. Here, they have not given anything like that. So go and meet him and tell him, sir, please issue me a show cause. And for surprise, you might find that he's not ready to issue a show cause. Otherwise, he would be more than happy. But sometimes, because he is also smart enough to understand that why you want a show cause. Let's go to the last part of the discussion, but again, 2 or 3 important points here. Lots of them, but I will not go through each of them. But 2 or 3 important areas which we will discuss. One is this GST 1A. There's a little bit of a confusion on how this will operate. We are aware 11th को GST 1 बन जाता है. There is no mechanism of rectification in the same month. Whatever rectification happens in the next month. तो 20th को 3B भरना है, जिसमें अभी 1 का टैक्स ऑटो पॉपुलेट हो जाए. If you have done an error in one, let us say instead of 100 rupees, you put 10,000 rupees, 0.00 का पॉइंट भूल जाते हैं. अभी कम हो रहा है वो एरर्स, लेकिन ह्यूमंस है, कभी ना कभी एरर हो गया. Tax of 1,800 gets auto populated in 3B, and your turnover itself is 100 rupees. How will you pay 1,800? So, to address that issue, we now bring in one more form. And that form is Form 1A, which says that after 11th, you can file this 1A form before filing your 3B. And say that, no, 10,000 मेरा error था, उसको मैं amend करके 100 कर. जो आप आइडियली नेक्स्ट जीएसटीआर 1 में कर ही पाते थे. But now, because you want to pay tax and you don't want to pay this much tax, which was because of an error, they permit you this window that you can have between 1 and 3B, you can file a document called 1A and amend the transaction immediately. So it solves your problem to some extent. Now, question comes, what about the recipient? And this is, I think, the larger query or worry which people have. And I think that advisory is very clear. And I think that was the way I was always interpreting. But the portal has also issued an advisory yesterday on this point to say that as far as the recipient is concerned, this will come up in the next cycle only. So his GSTR 2B of that month will not get impacted. It will get impacted only in the next month. So honestly, it's an important form if you make some genuine mistakes. Otherwise, really life doesn't change too much because of this GSTR 1A. I think other things are fine. Not unless, B2C has cutoff limit reduced from 2.5 lakhs to 1 lakhs if we have many examples like that. Then annual returns, the same exemption of 2 crores continues. New columns for e-commerce operators have come in, and the earlier relaxations which they are given will continue to apply in the new annual return process also. And of course, now our teams will reach out because we are already into the end of July. So maybe in the next 3-4 months, we'll have to ensure that all the annual return filings happens in time. So that is one more area just to remind ourselves that yes, this is an important pending obligation which will now start. This is an important change in adjudication. Now, as I discussed a few minutes back, today we have two sections, 73 and 74. 73 dealing with non-fraud cases, 74 dealing with fraud cases. And there are different timelines and different show causes for each of them. So what the government says is we now want to simplify it. Let's merge both of them, have it into a single situation. So from financial year 24-25, you will have a common section known as section 74A. And under that section 74A, there is a common timeline of 42 months from the period for issuance of show cause. So show cause can be issued within 42 months from the relevant date of filing the annual return. And thereafter, within a period of 1 year, he will have to issue an order. So typically 42 plus 1 year, we makes it 54. And you are given 6 months extension. The officer on a case-to-case basis can go to his senior and get a 6-month extension. So which will be given at a platter. So 54 plus 6 takes us to 60, which is today the extended time period. So we want to merge both of them. In effect, what you are doing is you are nullifying 73. You are not merging 73 and 74. You are technically just nullifying 73 by doing this. Because you are ending up with the same 60-month timeline which is existing even today. Only saving grace is that if after the order you pay within 30 days, you are given a concession in penalty. That concession in penalty is now extended to 60 days. So you can pay up to 60 days and decide whether you want to go in appeal or pay and conclude. Yeah, this is important. If as of today, after 7 years, we don't have the tribunal in place. And therefore, if the first appellate authority order is against you, you are stuck. Government has extended a timeline saying that whenever the tribunal gets set up, after that within 3 months, you file an appeal. So far, so good. But problem is that, let's say there's a confirmed demand against me. So what do I do? So now we have a circular which says that if there's a confirmed demand and you intend to go in a tribunal, if you had gone in a tribunal, you would have paid a pre-deposit. So please pay that pre-deposit and inform me in a particular manner that yes, I have paid this pre-deposit, and as and when tribunal gets set up, within 3 months, I will file an appeal. Then only the amount will get stayed. If you don't do this, then the amount is not stayed. And after the first appellate order, the authority can start the recovery process. So that is an important procedure. If there are any pending matters which are pending to be filed before the tribunal, this will have to be actioned out. This is again an important point where you have deposited the tax in the cash ledger, but you have not offset it. Right? You are aware that there's a 2-step process. You have to first pay the amount from your bank. It goes in your cash ledger. And then through 3B or through DRC3, you offset that tax against a liability. So if you did the first step but forgot to do the second step, department was asking for interest all along. And now we have an amendment in the law to say that if you have a balance in the electronic cash ledger, to that extent, there will be no requirement of payment of interest on the delayed filing of returns. I think that's from my side. Some of those things we had dealt with earlier, so I'm not going into that in too much of detail. Maybe we can have a few minutes of questions. We are at around 12, but maybe we can have 15 minutes. If anybody has questions on whatever I have talked about, we can just take up a few of them. Yeah, I think no questions is good news.